Good morning, everyone, and welcome back to the Daily Hunt for Multibaggers. It's Wednesday, April 8th, 2026, and we're diving into the AI-generated insights from yesterday's market activity.
That's right, Ethan. Our systems processed a truly buzzing day of discussions and market signals, flagging over a dozen unique stocks. Takeo and ASG were definitely leading the pack in terms of pure mentions, capturing a lot of community attention.
You know, the overall sentiment is a mixed bag today, isn't it? We saw some really strong bullish calls and exciting growth narratives, but also some deep dives into underlying risks that demand our attention.
Absolutely. As always, we're here to parse through that noise and highlight what really matters for potential future performance.
Kicking things off today, let's talk about Micron technology, ticker MU. There's some really good news here, Brooke, showing the strong bullish sentiment. We've seen posts about successful options plays, even bold predictions for MU hitting $1,000 a share. The AI-driven demand for their chips is a major tailwind, and a five-star analyst recently made a strong call on the stock. Plus, get this, insider buying is huge, representing over 30% of total insider shares. The historical performance is nothing to sneeze at either, going from around 70 to over 370 in about a year. That insider buying is truly compelling, Ethan, and those profitability metrics are excellent. We're talking about a 41% net profit margin and nearly 40% return on equity. That signals a really well-run company converting revenue into profit effectively. However, we have to talk about that 14.9 debt-to-equity ratio. That's really high. While the future AI demand could certainly offset it, that's a significant point of caution if things don't go perfectly, don't you think? True, Brooke, that debt is a factor. But the narrative around MU being a critical AI infrastructure enabler, combined with that phenomenal insider confidence, really makes a strong case for future growth outweighing the current debt concerns. We've rated MU as buying many times before, and after a stay away on April 1st, this analysis, to me, looks like a strong rebound to a buy classification.
I agree that the AI tailwinds and insider confidence are powerful signals, suggesting the potential for these impressive KPIs to improve even further.
Our AI-generated insight for Micron technology, ticker MU today, is a buy.
Next up, let's turn our attention to something a bit different. Berto Acquisition Corp, ticker Takeo. Ethan, this one had a massive 300 mentions yesterday, by far the most hot leads in our system.
Yeah, I saw that pop. There's a lot of community buzz around Takeo.
But here's the kicker, Ethan. None of that buzz is actually about the company Takeo. It seems to be more of a general trading community meme, like a Takeo Tuesday reference, rather than specific discussions about the stock itself. The financial picture for Berto Acquisition Corp is frankly alarming.
So it's essentially a hot lead for a name, not for the underlying business. That's a crucial distinction.
Exactly. We're looking at a net profit margin of 0, operating margin 0, a negative return on assets, and yet the stock still carries a price-to-earnings ratio of over 35. That implies strong growth expectations, but with absolutely no current profit, that PE is unjustifiable. It's also trading very close to its 52-week low. These KPIs are screaming stay away, regardless of social media volume.
Wow. So even with all those social mentions, it's essentially a ghost town for the actual company. We had it as a speculative gamble just a few days ago, but the complete disconnect between sentiment and company financials is pretty striking here.
It's a clear downgrade in my view. The KPIs show a company fundamentally struggling to generate value. No news or events seem relevant to this Takeo either.
Based on this deep dive, our AI-generated insight for Berto Acquisition Corp, ticker Takeo, is a stay away. All right, let's move on to Datavault AI Inc., ticker DVLT. This is a fascinating one, Brooke, because we saw a real mix of sentiment yesterday. But the underlying story here is really compelling. People are talking about a $1 trillion tokenization narrative, concrete metals tokenization deals, and, crucially, news about their first profitable quarter. Plus, get this, insider buying is off the charts. Over 86% of total insider shares purchased over the last 6 months. That's a huge vote of confidence.
I hear the enthusiasm, Ethan, and that insider buying is truly notable. Revenue growth at almost 37% is also very strong. But let's look at the full financial picture. Despite that recent first profitable quarter, the trailing 12-month net profit margin is still negative, as is their earnings per share. And that debt-to-equity ratio of 6.4 is a serious concern. It implies significant financial leverage, which is inherently risky for a company not yet consistently profitable over the long term. We've even seen comments flagging some of the positive write-ups as AI slop and warning against retail investors buying at the top. The stock is also far from its 52-week high, indicating past investor pain. I get the skepticism, especially given some of its past performance, where it's been labeled as speculative gamble or stay away before. But the strategic partnerships for tokenization, the upcoming XRP token presentation, and that reported profitable quarter could be a real inflection point for DVLT. These future developments really could change those negative trailing 12-month KPIs. It feels like it's not just a story. They're making tangible moves. They are making moves. And the potential for a shift in profitability is certainly there, particularly if these tokenization projects gain traction. However, for a general investor, the current overall KPIs still represent a very high level of risk. Until we see consistent profitability and a healthier balance sheet over several quarters, it's hard to justify a buy classification. It's definitely one to monitor closely, though, for those with a higher risk tolerance. Our last two ratings for DVLT were cautious buy, but given the conflicting signals and the inherent risk, for broader investment consideration, I'm leaning towards stay away. So the AI-generated insight for Datavault AI, ticker DVLT today, is a stay away. All right, Brooke, let's round up today's picks based on our AI-generated insights and market commentary. Investigate as buy, Micron Technology, ticker MU. Investigate as cautious buy, none. Investigate as speculative gamble, Datavault AI, ticker DVLT. And that wraps up another episode of the Daily Hunt for Multibaggers. Just a quick reminder, this podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset.
Thanks for tuning in.
We'll be back tomorrow with more insights.
Happy hunting, everyone.